It's Mark from Caliber Home Loans. It is Saturday morning, and we're going to do a quick snapshot of the market for the last couple of weeks. As I'm sure you all have realized, that the stock market has been in complete turmoil and pretty much cratered, even though yesterday we did have a good day. I was up 1,900 points. And the bond markets have pretty much cratered too after this past Monday. So this is what's affecting mortgage rates. So let's just take a look at today, or at the end of the day, Friday. So Friday ended up, rates got a little bit worse at the beginning of the day. And then actually through the course of the day kind of stayed pretty consistent. And then towards the end of the day, pricing actually got a little bit better. So the price of the bonds went up a little bit, which took a little bit of the pressure off of mortgage rates. But I took a quick look around the industry, and most lenders still raised rates at the end of the day Friday to slow down the amount of loans coming in over the weekend. There just isn't any capacity left. So let's look at the this past week. So you'll see that the trend line is definitely down. I mean, it was a bad week. We were at the lows for mortgage rates over the last weekend. So Friday we kind of hit the low, and then it's been up for rates. It's been uphill since then. I have never seen rates go from where they were to the all-time low to back to where they were, basically to mid-February levels in a 2-week span. It's kind of mind-boggling. Nobody really has ever seen this before. We don't know what's going to happen on Monday. Some of it depends on the stock markets. Congress passed the spending law for the government to spend money to help people with the virus. We just don't know how that's. If the stock market has a really good day for a couple of days, it will bring more money out of the bond markets, which will cause rates to go up a little bit more. That's my best guess. The other thing is that unlike the Treasury markets, investors who hold mortgage bonds are not going to allow their yields to go down to nothing, because there's the inherent risk. There's 2 risks: the inherent risk that people stop paying their mortgage, and which puts their bonds in default. And when these investors are buying these bonds and then people are refinancing 3 weeks later, they lose that money. It just doesn't make sense. So they're pushing up the yields that they want to accept to take care of those 2 risks. So this was the past week. So let's look over the past month. So you'll see that rates were generally going down as the price goes up, and until Monday. And then you saw that the price fell off the cliff, which puts rates down. Let's do an all-time. So you'll see that we're pretty much at the same place we were in mid-February as far as pricing, maybe in January. So it's, again, we don't know exactly where we're going to end up with this. Rates are still low. I mean, comparatively speaking, they're just not in the low 3s. People think that there's a lot of chatter on the media that think that the 30-year is going to go below 3 and into the mid-2s. I just can't see that happening, because I don't think the lenders will allow it. There's no capacity. I mean, if you can only make 100 cases of beer a day, and you can sell 500 cases of beer a day, why would you drop the price? I mean, at some point, the lenders are going to pull the plug and say, we're not going to do this anymore, and we'll just raise rates and try to close out the pipeline as we can. But having said all that, I'm lucky that I work for Caliber, because we've completely reorganized our operations team to make sure that we get the purchases out the door first, and that we're trying to keep our purchase rates a little bit more competitive than our refi rates. And this is pretty standard in the industry, and that we're doing a real good job. We're still closing purchase loans in 30 to 40 days, and then our refis are typically still closing at 45 to 50 days. I know that some of the big box lenders, they're almost up to 90 days for a refi closing. So we've done things right. We got ahead of this problem early, and we're looking forward to helping more homeowners and home buyers. I'll be around all weekend. If you need anything, 248-705-8431. Thanks a lot, and have a great day.